Well, hey, welcome to another video. Um, my name is Rocky Calvin, and this will be just a continuation. This was a previous video that I was talking about important things you need to become profitable. That video is over here on this channel. I hope you can go and check it out, and I hope it will be helpful to you. So, in this video, I want to talk about the trading journal. A trading journal is very, very important for traders, not only trading, but I think in our daily life, because sometimes things do happen on specific dates and time, which are very, very important that if we don't pay attention to the sequences of how they repeat themselves or how they often happen, then we are missing something out or some important information. So, journal is very important because that is what is gonna be helping you to know where a problem is, what where the strength is, for example, what you need to change, what you need to improve on, lessons, and so on. So, how to create a journal? I understand that majority of beginner traders still don't understand what a journal should consist of and the things that are supposed to be included in a journal. So in this video, I'm gonna go deep into it, and without wasting time, we're gonna go on the first thing, date. So the first thing we're gonna have our date. Date is very important because in future you might just want to get to check specific dates on events that happened, those dates. So first thing first, we're gonna have our date. Okay. Now second thing, we're gonna be having our session. Now session is important because we need to know which session works better for us. Is it New York or London? Okay, we're gonna have session on the next column. Then third, we're gonna be having buyers. Buyers. This is for traders who takes trades based on understanding buyers. But there's some traders who there's some trading systems whereby you don't even need to know the buyers. Okay, like some of the smart money concepts. You don't even need to know where today the market is going to. All you need is to understand where liquidity is, and once it is taken, you take the opposing liquidity, as simple as such. But majority understanding the general bias where the market is going to or what is happening is very, very important. Now, for the for the fourth column, we can have something like maybe liquidity. Let's talk about liquidity grab. Let's have about liquidity grab. Liquidity grab. This for the SMC, smart money concepts traders. And if you're not using smart money concept trading, you can use something like breakout structure, support and resistance. Market is on a point of interest, such kind of things. Okay. So I'm just using liquidity grab because this is what I mainly use because I trade smart money concept a little bit, but not really much of it. I have my own concepts that deal with time and price in a very, very different, in a very, very different manner, which is mathematical side of it, which maybe in future, hopefully, when God gives me the grace, I'll be able to share with you guys. And you can have something like, like for example, you see all these things. For example, the bias. You have to write next to hit bias. What's happening here? Like, what's the what's the notes behind it, or do you have anything specific that you want to talk about this bias? If it's undecided, okay. If it is liquidity grab, has liquidity been taken? Has liquidity grab already happened? What's the checkbox? What is that you're gonna be putting on that checkbox? Checkbox. Sorry, I don't know what's happening with my pronunciation here. So anyway, let us continue. Now you can even add something like PDRA. You can even add like something like PDRA. Remember, this just to give you confidences of what's supposed to include in your trading journal. Because you see, when you're trading SMC concept, it's very different with the person who trades some, like for example, the retail concept. Because the retail concept, they consist mostly about resistance and support and all those other things. I used to trade them actually. I used to trade double bottom, double top, head, pattern, shoulder, and so on. I've done it all, but they all work. By the way, I'm not here to say that they don't work. They work perfectly well. But the problem is that I wanted something more. I wanted something even by the By the time I used to trade SMC or ICT, I still felt like there's something missing, like there's something I gotta know, and that's what led me to this mathematical side of trading where I am right now. And glory to God, because whatever I know right now, only God could teach me that, not by myself. Okay, so you can have something like PD array. So PD array, uh, for example, yeah, with PD array simply means I'm talking about order blocks, fair value gaps, breaker gaps, and all that. Okay, that is about the PD array. Okay, now also you're gonna be having for example, the PD array being used. Are you on a discount or premium, or for example, which one of those have you used to enter? For example, liquidity grab had already been taken, and the PD array you had was a fair value gap or an order block. Okay, like what I was explaining here in this trade. Liquidity was taken here on New York Open. That was on 9:30. Remember, I'm using UTC plus 3. It was taken up here, price opened here, went and took this liquidity here. Then once it dropped down, created this gap. As you can see, we have a bearish fair value gap here. So once this gap was created, people waited for break of structure down here, which did not, maybe for you to see it, maybe you go to 5 minutes, you'll be able to see it way more clearer. Yes, we had some break of structure down here. Remember, I'm not trading. I don't trade this type of concept nowadays. This ICT, Judah swing and so on. I don't really use them, but I still know how they works. Okay, so after that, for example, the liquidity grab has been taken up there. We have a bias. We are supposed to be selling because we are on all-time highs, and um, liquidity of buy side has been taken. And also when you take a look at for example, session, this is New York. Okay, the date, of course, we have it. The PD array that we are using here, we are currently at I'm sorry, premium. This is premium, where price was at. Okay, and down here was discount, right? This zone here, this was discount, premium, equilibrium. Okay, so PD array being used here was at this bearish 5 minute fair value gap, and here we go. Price comes in, you sell at the consequent encroachment of that bearish fair value gap here. Remember, I'm writing everything down. So, for example, if I was taking this trade, I write for a date, I've written it down on my journal. Okay, session, New York, I've written it down. Bias, I'm bearish because we're on all-time highs, and there's a reason for me to sell because we have already attacked the we've already attacked the buy side liquidity. So I'm expecting for us to target the sell side. So but we have our bias, we have a liquidity grab has already happened, and we have PDOA. Yes, we have a fair value gap, bearish fair value gap created, which supports the cells. And sorry about my pronunciation there. I don't really know what's happening. But either way, I hope you guys understand me. So that's already marked. Okay, so on number 6, let's have our number 6 is now when you have our entry. So on this entry, we can have our note on entry. Sorry, entry. Yeah, we can have a note on our entry. Okay. So for example, a reason for our entry, like short explanation of why did we take these cells. Okay, that's where you can write. Price had already taken buy side liquidity, and we had a PD array being created of a bearish 5 minutes fair value gap, and price went back into that gap, and I entered shorts targeting the opposing sell side liquidity, and that's it. So this is your trading journal, and this is also your checklist. Like for example, you can have, for example, bias checked in, tick. Liquidity grab happened, tick. PD array created, fair value, yes, tick. Then you see this will enhance your trading to the next level. Okay, so apart from that, you can also add things like risk to reward. uh, Risk to reward, for example, number 7. We can have RR, or returns. Okay, risk to reward, we can have that at number 7. So this will let you know you're going to be having that data of what often works for you. Is it 1 to 2, 1 to 4, 1 to 1? Okay, and that's on the That's on the risk to reward, and also you can have, for example, how many points were you risking? How many points were you risking here? You can have it all written down so that when you're starting your journal, in case there's a problem, you can be able to see that okay, any day I have this amount of points risked. Price will usually behave in this manner or in that manner. Okay. Now, also you can have take profit points, also stop loss points, and also apart from that, you must not actually you must have um, a risk. Like how much is at risk? You gotta know what are you risking in this trade. Okay. So, for example, if you're risking 1%, you're risking 1% to make two. If you're risking 0.5, you're risking 0.5% to make one. If you're risking 2%, you're risking 2% to make four. So that's it. You gotta have a valid risk management. Okay. And apart from that, another very important part is the emotion side of it. But even before we go to emotion, let's talk about the result. Result. Did it win or lose? You gotta write it down. If it lost, okay. If it won, fine. And now after that is now we're gonna be checking in with the emotion. How do you feel after losing that trade? How do you feel after winning that trade? You have to write it down. Emotions. How are you feeling? Because they're very important. So the days that you are losing or the days that you're winning, how you're feeling will determine on how you perform on the long run on other trades. Okay. So these are the most important things. Then lastly, we can have now, for example, some notes, maybe number 11, like for example, lessons. What did you learn from this trade? Like, is there something new that you need to improve on? Or is there something that you learned new about this trade? Okay. So this is all about trading journal, and these are the contents that you need to have in your trading journal. A lot of traders I know, some of them don't even consider creating a journal, but you see, it's very important because if you want, you cannot you know um, change or you cannot improve something that you don't have data about. You gotta have data, and you're sure that this is the problem. For example, majority of people often jump from one strategy to another, me included. Back then I used to jump from one strategy to another because I did not have that trading journal that had all the like for example the data and all the information that I needed to make an important decision based on whether my strategy was working or not. So that will lead you from jumping from one strategy to another because you don't have a data. You don't even know what you're doing, like what you're doing, because you don't know. You just take random trades, you violate rules, you don't journal. Like, you have no data that can give you information whether your strategy is the problem, your psychology is the problem, or discipline is the problem, literally. You see. So journaling is very important, and if you don't journal, please start right now. You can journal in so many ways. For example, you can do this using Google Sheets. You can do this Excel. You can do this by physically writing down notes. Just take a book, have a column. The first column is going to be this contents. Now the second column is now for the answers for this contents, and also the third column of maybe just an extra thing, you see. So that is about this video, guys. I hope this was helpful to you, and I'll see you in the next one. I've also done a video about the key to consistent profitability. Like, there's plenty of videos of really really great information in this channel, so I hope you guys, you can take your time, go check them out, and I'll see you in the next one. Bye, cheers.